All right, we are live. Welcome back to Stock Tricks with Nick. Hope you guys had a good trading week. If you were short the market, you probably had a great trading week. If you were long, especially long any of the growth stocks, might have been a rough one. So if you're new to the live stream, we do these on Tuesdays and Friday nights at 7 p.m. Central Time. And the goal of this live stream is to go over what I'm currently holding, what's on my watch list for either the following week or if it's the Tuesday live stream through the rest of the week. And then just full transparency. So a lot of people on YouTube, when they talk about their trading, they love to just share all their winning trades. And as good at it as it is to show your winning trades and winning setups, if you're not prepared to take a loss mentally and emotionally, when it comes time to take a trade off the table, like we've seen this week, the earlier you took the trade off, the better you did, you won't be prepared. So this live stream, this channel is always going to show the winners, but also the losers. And have a couple losers to share today, but thankfully, throughout the last week and a half or so, we saw the warning signs. If you were on the live streams last Wednesday and Friday, you were warned. We talked about this. A lot of people on StockTwits said that they were just holding off on trading until after the election. So we'll go over all the kind of warning signals that the market was giving out that indicated that it was under some selling pressure. And then we'll go through the stocks on my watch list, what I got on StockTwits to cover from you guys, current trades that I've made, and then at the end, I do have my aggregated trading results from October. Slightly green month, up about 1.5%, while the market continued selling off. So not a huge month, but profitable month while the rest of the market was red, so I'll take that. And then we'll go over the importance of tracking your trades and what metrics that I like to see the most. So before we get into this, give me a follow on StockTwits, that's Stock Tricks with Nick, and Twitter, that's Stock Trick Nick. Posts mostly on StockTwits, so that would be the main place to follow me. But also subscribe to this channel. We do the live streams on Tuesday, Friday, and starting to put together a Trading 101 series. All right, with that said, as you can see on the agenda, market recap. So this week, we didn't get the stimulus. We have the election coming up on Tuesday in the United States. I know there's a lot of people on the stream that aren't from the US, but this does impact the markets. And then we had a lot of earnings, a few earnings that broke out and held that, like Tupperware and Snapchat, but a lot of these earnings, you saw relatively good numbers, maybe a few stocks break out and then immediately sell off. And that's never a good sign, and we'll cover that in a little bit. So let's jump to the charts, and we'll just go to the S&P 500 first, SPY, and let's see. So we have Friday, Thursday, Wednesday, Tuesday, Monday. So we started off on Monday with a red candle here, making lower lows, lower highs, obviously. And you see we really dipped down here, and then this got bought up right near the end of the day to close just below the 50-day simple moving average. But anytime a major index closes under the 50-day simple moving average, it typically leads to increased volatility. So at this point, that was a big warning sign for me to really liquidate a lot of positions, continue to add hedges whenever I put on a new position. So typically I like to short DIA, which is the Dow Jones Industrial Average. And that's what I was doing on Monday. So we got that red day. Tuesday, we got an inside day here that still closed slightly red, but inside day, lower volume. and then we really broke down on Wednesday, closed right at the low of the day, under the lower Bollinger Band on high volume. That's always a terrible sign. And we kind of got saved on Thursday because the major companies, Amazon, Apple, Facebook, and Google, were all reporting earnings after the close on Thursday. So you saw the NASDAQ bump up a little bit. We'll jump to that in a second. But you saw a lot of these indices kind of bounce back on Thursday just in hopes that earnings went well. And you saw after hours, Google did really well, and Facebook was flat after hours, but then today they were pulled down. But then, yeah, a lot of these big names had fine earnings, not terrible earnings. Some beat and sold off today. So that's always a warning sign. And then today we got the run up right towards the end of the day, but still right around that lower Bollinger Band. Still looks like it's in trouble. Most likely going to test the support of this lower low here. Let's see what that day is, September 24th. So that's the S&P 500. Let's jump to the QQQs. Oh, and let me change this guy over to explain what's on my chart. Sorry, I should have done that at first, but there we go. So we have the Bollinger Bands, these blue bands that go around the 20-day simple moving average, which is this green line. We have the 8-day exponential moving average, tracks a little bit shorter term trends. The 50-day simple moving average, red line, and the 200-day simple moving average, that's the yellow line here. We also have volume down here, along with the last 50 days moving average for volume, so we could see if things are heavily sold off or heavily being bought on volume. And then we have price relativity compared to QQQ. So if I jump to the S&P 500, this will show the strength compared to the NASDAQ. So we always want to be buying stocks that's showing increased relative strength, that are breaking out of bases. Those are the best stocks to buy if you're going to be a swing trader. So jumping back to QQQ, you see Monday wasn't as bad, but still closed right at that 8-day exponential moving average. Tuesday, we had an inside day, really dumped on Wednesday, closed at the low of the day on high volume, right at that lower Bollinger Band. Got that Thursday bump up, but never cleared the 8-day exponential moving average. High a day, never even got there. And the volume was a little bit lower on that. And then today, when all the major earnings reports sold off, you saw this just drop through, create new lower lows, and a little bit of a lower wick here as it got bought up in the last half hour or so. But still a lot of market weakness going into what would already be a very volatile time with election on Tuesday, the virus, no stimulus yet. So not a lot of things to be happy about in the market unless you're short. If you're short, you're loving this. This is exactly what you want to see on the charts. Let's see, Dow Jones Industrial Average, just really quickly, same type of pattern. Didn't get that bounce up as much on Thursday, so that's why I did short that instead of the QQQ, just because you could see the price relativity. This is just forever in a downtrend or lately in a downtrend. So if I'm shorting something, I want to be shorting the weakest stock or weakest index. If I'm going to be buying something, I want to be buying the strongest stock or strongest index. So that's DIA. You can notice today we touched that 200-day simple moving average, but then it moved right back up. Closed relatively high, only down 0.5%. That last half hour kind of not killed this week, but you can see I was down $740. I was only down like 500 within the last half hour. So right now I'm currently net short about 1/3 of the money in my account right now. I have a couple long positions, but very, very light, and they're all typically holding up relatively well. So let's jump back to the agenda. I think we go, yeah, so let's go earnings next. So we'll just run through these. Apple, you see, never really got going today. This one started, gapped down, and then just pressed lower, closed at the low of the day on higher volume. And a close, we talk about Bollinger Bands on the upside a lot, where if you close above the upper Bollinger Band, if you close above the upper Bollinger Band on high volume near the high of the day, then that's typically a bullish signal for continuation. The opposite is also true. If you close near the low of the day at the lower Bollinger Band or below the lower Bollinger Band on high selling volume, that typically leads to continuation as well. So that's what I'm seeing out of Apple. Before earnings, it tried to break over that 20-day, 50-day converging simple moving average, couldn't do that. Really showing weakness here. We will likely test these lows, and then there is a gap down here all the way to 96.30 if things really press down in the coming weeks, or maybe even the coming week. But yeah, looking weak after earnings. That was Apple. Amazon down 5.5% off an earnings beat. Really strong earnings. No reason why it would have dumped other than just continued market pressure. It's rough here because this is a solid pattern. If you didn't have earnings going in here, this is that volatility contraction pattern that we talk about all the time. You have the first pull down of 19%, that second pull down of 11%, and then this third one of 4%. So not exactly drawn, but there, and there. Those three pullbacks got less and less. That typically leads to breakouts for stocks that were in an uptrend already. And this broke to the other side, which if you followed the stream last week, you noticed a lot of the stocks that I was talking about is here are 10 to 15 quality setups. Let's see how these how these do. Are these going to be breaking out? That's going to show that the growth stocks are doing relatively well, the market's healthy. But no, like I think last live stream there was 25 stocks we were talking about. 24 of them were red the next day. So when all those quality setups are breaking the wrong way, that's the first signal that I get that the market's weak. Because the indexes, those will typically lag, especially with earnings. I knew those weren't going to go too drastic in one direction or the other until earnings happened. But the first signal that we got was growth stocks that were in consistent uptrends that had pulled down in September, but were making higher lows. When they attempted to break out or were at that breakout point and broke to the other side, broke down, that's warning sign number one. So quality setups breaking to the wrong side after being in a constant uptrend. That's your first warning sign. I guess the first warning sign is election volatility, virus volatility, no stimulus volatility. There's three strikes already. You shouldn't be trading super heavily at this point. Then you get your quality setups breaking down. And then another thing is you get quality earnings also breaking down. So I'll jump to Facebook and Google in a second, but I wanted to point out OSTK, overstock. So this is just about the most bearish chart that you could see because this opened up, I think it was like 12%, 14%, 12 to 14% after their earnings. So at this point, it was above that 8, above the 20, above the 50-day simple moving average. All is looking great. It had been in kind of a downtrend here, but when you break out 12 to 14% after your earnings, that seems bullish. But it really only got, let's see, what is the high of the day here? So it opened at 82.01, went to 82.40. So that's only 0.5% from the open. It went up and then just rapidly sold off the rest of the day to get a bearish engulfing candle. So that's where the highs and the lows are higher and lower than the previous day here. So you can see high, higher than this, low, lower than that low. And on huge volume. And closed right under the lower Bollinger Band on high volume. So that checks all the boxes of a bearish indicator on the stock. And the fact that it had broken out and opened up so much and then instantly sold off is a huge warning flag. I actually took this stock short today after it opened up here. Where's my trade flags? There we go. So you can see I shorted just a small amount at 64.08 today. Let's see, what was the high of the day? 65.84. So I started shorting when it showed weakness as it was coming back down from the high of the day. But first hour or so, it was showing decent strength while the market was pulling down. So I was watching this 8-day exponential moving average to see if it could break over that, then I'm not going to short that because it's showing a stronger bounce than I would have expected. But it got close to there and then started to show weakness. So took a short position in that to add to my DIA short and shorted around plus 3%. Took profits twice, so I'm only at a third of the position left right now. But we got a new lower low, lower high, pretty high selling volume still, and a close under that lower Bollinger Band near the low of the day. So still looks bearish and a good warning sign. Unfortunately, if you were in the stock and it broke out here, you probably had a stop loss at the 20-day simple moving average, or maybe at least at the low of the previous day. You would have gotten out for not much worse than you entered. That's another reason why I love to give the first 30 to 45 minutes of the market opening before buying into a stock, not chasing breakouts, because when you do, first off, you're just getting a really bad entry point. It's already broken out from the base. The likelihood that it at least pulls back at some point is very high. And if you keep strict risk controls and your stop loss is 5 to 8%, the likelihood that you get stopped out is higher. So never chase a stock that's already broken out, at least 10% away from the base. Not worth to touch it. There's going to be stocks setting up. You just got to be patient. But yeah, this long red candle gave all the bearish indicators that it could. So when it started showing some strength but couldn't get over that 8-day, I started shorting, took profits twice, so only at a third of the position right now, but still looks bearish. Another stock that beat earnings but sold off was PENN. I think their earnings were Thursday. Let me just throw that up. Yeah, so Thursday, you see it opened right here. So opened up like 4%, 4.5%. Tested over that 8-day exponential moving average, couldn't handle that, and then pressed down, closed at the low of the day, right at the lower Bollinger Band, and on relatively high volume. Today we got lower lows, lower highs, another continuous close. And this was a trade that, if you followed me before, we've already talked about this, but really quickly, I bought on this candle and then on this candle breakout. So I had an average of like $70 entry point, a little bit less, maybe like 69.50, 69.70. And then we got this large candle on increased selling volume, that broke through these lows of the days. So I got stopped out immediately there. So, but this was one where this was a quality setup from a stock that, if you know PENN, has been a monster since it's bottomed up 1,000%. So quality stock in a strong uptrend, doing normal wiggling, normal pulling back, that broke to the downside. That was the first yellow flag for me on the market. And then the second one is earnings beat, continues to sell off. That's no good. Let me cross out some of these as I go through them. Apple, Amazon. All right, so let's jump to some good news. Google beat earnings, but you can see this is not a super bullish candle because, let's see, what did it open at? Open plus 7%, but you see this red, here, let me take away earnings so it's a little clear. Red candle close with the top part outside of the upper Bollinger Band. That's typically a bearish indicator. And now has a small gap there. But at least it was green today. So a lot of other stocks were deep red. So something to watch. If the market does turn around, this at least has a head start against some of the other big names. On the downside, I would watch this converging 50-day and 20-day simple moving average as support. That's Google. Facebook, similar story, just opened relatively flat. Let's see. No, opened down 2%, nothing crazy, but then did sell off throughout the day, broke through both the 20-day, 50-day simple moving average, and has now undercut this low. But just not a lot of good going on in the market right now. Shopify, another one that really nice kind of wiggle pattern that without earnings you could take the trade on this breakout and at least have a good risk reward on the trade. But then you see high volume selling, 3 large red candles, and now this closes well below the lower Bollinger Band. And after the Bollinger Bands constrict and you get those closes under, they're going to expand and you're going to see typically a rapid sell-off here. So couple areas of support there. The 880 area where some of these lows are, and then 837, 840 for easy math here, where this low is to watch. That's Shopify. Twitter. Twitter was probably easily the worst of the group today, down 21%. Gap down and never found any traction. Broke through that 50-day simple moving average, closed under the Bollinger Band after moving up the day before. So it was up 5.5%, 6% going into earnings. So that gave it a little bit of a buffer, and you could still see this has fallen all the way back to kind of this base area here. So does have another good level of support through the 38 to 39 range, something to watch for. But I'm not buying just straight into a downtrend. I'm waiting for it to find some support and then bounce back up. So that was Twitter. And those were all the earnings that I wanted to talk about. As you can see, a lot of earnings, quality earnings, getting sold off. Never a good sign. Whenever there's good news, like seemingly good news for a stock, and it doesn't break out or doesn't react how you would expect it to, and starts either selling off or stays flat, that's typically a time to just get out, take your losses, or break even, small profit, whatever you're at. And then the opposite's true. If really bad news comes out about a stock and it stays flat or even moves up, that's time to add more. Because if bad news can't bring it down, chances are it's going to continue. If good news can't keep it up, chances are the sell-off's going to continue. So those were the earnings. Let's see. Let's get to a couple stocks that you guys wanted to see from StockTwits, but also you can use the chat function here on YouTube, and we'll get to some of the stocks that you guys want to see. So first one was Carnival Cruise Lines. So got some good CDC news that don't know exactly the rule, but they were backing off their COVID restrictions. So you saw pop in volume here, higher highs, higher lows, closed right at that 8-day exponential moving average, but still not a stock that I'm going to be buying into just yet. You can see this drawing from kind of like this high down. It's been in a strong downtrend, hasn't been able to break through that. If we could break over this diagonal, so let me zoom out so you guys can see the full picture. You can see it's not anywhere close. This is not a leading stock, obviously. But for some people that play those quicker bounces in the stocks, if we could break over this resistance area, this diagonal from the high from, let's see, June 8th, then you might see a short squeeze, maybe push up against some of those Bollinger Bands and test this 200-day simple moving average. But again, not a stock that I'm going to be personally trading, but I know some people wanted to see this. So that's Carnival Cruise Lines. Got some good news. Let's see if we can break resistance, especially if buying volume continues to go up. If buying volume continues to go up, that's great. If we start to see pullbacks from this news on high volume, that's concerning, a reason why I would not trade it. So that's CCL. Got another one, AWH. So let's zoom out here. Strong uptrend through here, 500-ish%. That's good. Then we get, let's see, what's this pull down? 54% pull down from the highs-ish. Yeah, so typically when it pulls down 50% or more, not a stock that I'll keep on my watch list, but this one is holding up relatively well. You can see price relativity compared to QQQ in a slight uptrend, as this has basically stayed flat the last couple weeks. But today we got let me throw earnings back on. Did earnings happen today? No. Okay, I don't know when earnings is, but we got a close at the high of the day above, reclaimed that 8-day exponential moving average. Volume's not really telling me much of a story here. It's been relatively quiet since this green day here. So let's see if we can't make. Yeah. So, I mean, showing good strength right now. If you're in the stock, that's great. You can put your stop loss under the low of the day, under the 20-day simple moving average, and then keep your losses limited. I'm not looking to buy a lot of stocks at this point. I would love to have the election just wrap up, have things shake out, and then build a base, and then even then, I'll let a couple names break out and hold their breakout to signal that the market's back, getting stronger, before I go back to my normal position sizing. So anything that I will be trading, I'll be trading with half of my normal entry size, which my normal entry size on a position is 10% of my portfolio. So right now, anything that I put on is 5% or even less, and everything that I put on also had a short hedge, dollar for dollar. But as you can see, I got stopped out of some today, so my hedge is now kind of my main position. TPC, kind of a weird one here. Found support at that 200-day simple moving average. Let me get rid of some of the higher volume here. Broke out, but not on crazy volume. Let's see, what was this breakout like? 26%. Broke out, got that red candle close outside of the upper Bollinger Band, and then quickly you see a pullback. That's a signal that I love to look for after a stock's been extended. It doesn't mean the stock has hit its all-time high, but it's a great time to take some profit off the table, because you can see this eventually pulled down 13% from those highs. At this point, you could just kind of draw a line through the highs. We did pierce this today, but did not close over the resistance, so still an area to watch for through there. Closed under the Bollinger Band, or is that with the close today? Let's see, 13.12. That's with it. So this closed 13.51. So we're still over the 8-day, but under the 20-day. Got earnings coming up. When is earnings? The 4th, unconfirmed. I'm not sure when earnings is. But this is what I'm looking. I want to see a close over this, ideally with large volume before getting in. That's TPC. Auto, AUTO. This one had been on my watch list because I was looking for kind of higher lows through here, which would have also mapped with the 20-day simple moving average and the 50-day simple moving average. So these 2-ish candles right here, I was ready to buy if we broke over some previous highs, but never really got that. Sold off, and then today we got a bearish engulfing candle. Was earnings today? No, it's after market's close. So down 9%, bearish engulfing, opened right at that 8-day and then sold off. So not a stock that I'm going to be looking to trade until it can really show some strength here. And with earnings this close, not a stock that I'm going to be trading. If you're still in it, you can kind of use, let's see, it depends where you got in. So if you are already 5% below your entry point, it's probably best to just cut the trade, get capital on the side, and then kind of detach emotionally from the situation. You can always put the position back on if it's showing strength. But anytime your money's in the market, it's at risk. And you want to limit risk as much as possible. So I love to just, if I'm feeling uncomfortable about a situation, about a position, I just take the trade off, or I'll take half off to just give myself emotionally just a little bit of leeway in the trade. So even if I do lose, I only lose half. If it breaks out, I still make money on the trade, but protecting capital, especially while the markets are weak, is my number one goal. This was auto. Here we go, Tesla. Okay, so Tesla was really looking to buy this one. Here, I'll hide trade history. So with earnings, this broke out, well, not broke out, but opened up and then pulled back down a little bit. And then, but never really broke this this flag through here. So wasn't super concerned with that little pullback. I was still watching to see if we could then go out and break over the previous day's highs. And you could see all the moving averages, 8-day, 20-day, 50-day, getting constricted in here. Volume drying up, which is what we like to see after consecutive pullbacks. So this had all the makeup for a breakout, but broke to the other side. So because I never saw a close over some of these moving averages or volume spike on a green day, I never took the trade. And that patience paid off, because you could see we got Wednesday, red day, close at the low of the day. We got that inside day on lower volume on Thursday. And then today, just a dump with the market, closed below the lower Bollinger Band. And these are constricted Bollinger Bands. So likely to see some continuation downward until the market overall can turn around. So two areas of support. The low of the day here from 924 would be 351. And then the low of the day, which also kind of matches up with some of these previous highs at 330 would be the support. So not a stock I would want to be owning with the close under the lower Bollinger Band. Increase in selling volume when that happened. If you're an investor in Tesla, that's much different. I'm talking about swing trading, where you're looking to enter at the right price, sell at the right price. If you're an investor, you love when it goes down, because then you can get in more and just hold forever. And as an investor, you know the company inside and out. You know the valuations, everything about this. So you're hoping it pulls down to give you a better buy price. As a trader, this is not what I'm looking for. This is not showing strength. Relative strength, even compared to the QQQ, is down. We saw high selling on a high volume day. Everything's bearish. Does that mean it has to go down? No, there's no absolutes in trading. Anything that we talk about here, all the technical analysis, is just putting probability in your favor. So I'm not overall bearish on Tesla, but right now I'm not trading it because it's not showing strength. So really quick, if you guys are getting anything out of the live stream, please leave a like. It really helps the video, and YouTube distribute that to more traders. So if you wouldn't mind doing that for me, it'd be super helpful. Thanks. So we got Netflix. Yesterday, they bounced up on high volume because they announced that they were increasing their the rates for their subscriptions. And you see this broke over the 50-day, closed just below, but I loved the high volume on this, so I started watching this again closely. Fortunately, today, along with the market, we just saw lower lows, lower highs, lower lows. Couldn't even breach that 50-day today, and then closed under all these lows. So we're right back in square one with Netflix. We'll see how the rest of the volume after hours today comes in to paint this picture a little bit better. But again, just not showing strength, so I'm not buying. I'm not buying a stock until it starts to show strength. That was Netflix. Zoom, this is one that I sold some into strength here. Let's throw the flags back up. Bought on this day after I used a really low pivot, or a low cheat, sorry. And then it basically just held its 8-day exponential moving average, so no reason to sell it through this point. And then you can see all the red flags as I sold into strength and then got stopped out of the last bit on this day. Even on this day, I was feeling kind of foolish because it was holding the 20-day fine, but as I was trying to pull off exposure overall in the market, I just took the rest of the trade off to make sure I locked it in for a profitable trade. And then, good thing I did. Hindsight's always 20/20 though, but in this case, it worked out for me. Market continued to be weak, and this just 3 long red candles in a row, breaking through the 8, the 20. Now we're approaching the lower Bollinger Band and the 50-day simple moving average, and the low of the previous base. So if next move down, and we're likely testing kind of some of the highs in here. So at 415, 420 area. So next couple days will be really important for Zoom. That's ZM. Wanted to go to a couple of my trades that I had this week. And let's start with the losers. So CHWY, CHWY, showed great relative strength. Let's see, this is Friday, Thursday, Wednesday, Tuesday. On Tuesday, you see an uptick in volume as this closed near the high of the day after recapturing that 8-day exponential moving average. The next day, it gapped up and kind of stayed right at that base for a little bit. So I did buy into this day. Again, bought with very light position size because the market's not telling me it's time for not time for home runs. We're trying to get singles, doubles, kind of get the feel of the market, see what stocks are showing relative strength, but really not putting on any size, not trying to make money this week or last week, just kind of testing and seeing how things hold. Unfortunately for me, it held very poorly. You saw lower lows, lower highs, and made a new low the next day, but it did come on lighter volume. And it closed the gap, so I was hoping we get another kind of reverse there, but we didn't. Gapped lower and then pressed lower all day, so did get stopped out of the rest. And because I had such small size on it, I did give this a little bit too much room to run on me. Typically, I like to keep my stops at 5 to 7-ish%. This one probably got 10% or so on me, so unfortunate trade, a loss for me. Losses happen. Probably shouldn't have taken any trade, but that's something I'm still trying to work with. I'm getting better at recognizing when the market gets weak, but something that I need to get over kind of emotionally is that I'm going to miss the turnaround point. So I'm not going to be able to call the low. The way I trade by buying strength, I'm not going to call the low of the market. So I have to mentally say, okay, there's going to be a day where you're hedged, Nick, or you might be net short, and it's going to be a red day while you're seeing the market go green. And that's going to hurt you, like emotionally, mentally, your ego. But I have to prepare for that because on days like this where I shouldn't have been adding positions on, I added positions. Even though the market was showing weakness, this immediately started showing weakness after I put it on the next day. Should have taken it off really quickly. But it was that ego in me that I didn't want to miss kind of the market bottom. I didn't want to see a red day for my P&L while the market was really green. And that's something I have to work through to really take that next step as a trader. So again, like I always say, I will share my losses, share my lessons learned with you guys, because if I'm only sharing my winners, you guys are only learning half of the trading. So that was CHWY. I wouldn't say a terrible trade, but should have kept a tighter stop on that and probably shouldn't just not taken the trade. If the market was healthy and that worked like that, then it would have been a fine trade to take. But here's JD. You see my first green flag here, and then we broke out, sold some into strength, lightened up a little bit, but this is really forming a nice cup and handle. And this long upper wick on Thursday, I did sell some at $83. Yeah, $82.96. So got some off there, but really nice cup and handle forming through here. So actually, that might be able to just extend. So there's your resistance. If you can break and kind of close over this point, especially as these Bollinger Bands are getting constricted, this is showing great relative strength. You saw a big volume day on the green day, smaller volume day on this minor sell day, and you see the lower wick touched off that 20-day simple moving average and moved up. So showing great strength, volume patterns what we like, cup and kind of a longer handle here after zooming out here. You can see this has just been in a very strong uptrend the entire way. This is a stock that I would like to own if it doesn't violate my stop loss. And if the market turns around, because this is showing great relative strength, this is going to be one of the first ones to run and one of the hardest ones that will run. So this is JD, something to add to your watch list. Maybe not buy right now, but once the market starts picking up, a good one to watch. Let's see. Another one that's holding up relatively well is Sleep Number, SNBR. So you can see let's see, from kind of this base here, 34% run up through here, big volume, and then you can see just volumes getting quiet, meaning all the short-term traders right now, they're like, all right, here's 34%. All my other positions are crashing, so I'm going to start booking a little bit of my profit in here, soften up my overall P&L, and this is forming a beautiful shelf right here. Has held the 8-day exponential average relatively, well, pretty well. This day might have closed right at it or just a touch below, but for the most part, right on that 8-day. You can see this is what I'm looking at. Support down here, resistance up here. I do have a position on this. Again, it's a really light one, but if this can break out, because look, price relativity, strong the entire way. Volume after the breakout, getting quiet. Bull flag forming, finding support at that 8-day. This is my bread and butter setup. So if the market was in a much healthier area, this would be a 10% position size, no questions asked, and then I'd have a tighter stop loss because it's been trading in such a tight range where if it starts to pull down, I'll know right away if I'm wrong. And those are the best trades to take. A lot of people don't want to be wrong in the market. I don't care if I'm wrong. I just want to be wrong fast. The faster I'm wrong, quicker I can get my money out of the market, out of the risk, and then keep it for a better setup or when the market's healthier. But this is SNBR, Sleep Number, seeing basically my bread and butter setup, but because the market's not as healthy, I'm not going to get too aggressive with it. Snapchat, this was one that I took on this bullish engulfing candle after it held really well, 40-ish% move, 45% move up here through earnings, pulled back down a little bit, but then looked like it was going to be going again. The next day when it opened, I was like, not really feeling it, so I did take some position size off, and I'm holding. What am I holding? Like not much at all. 30, 1,000. So 2% of my portfolio or so in this. It held the 8-day exponential moving average right now. If we get a lower low, I'll probably cut the rest for a loss there. But in normal times, a breakout this strong that holds relatively well and is holding at the 8-day, that's something that I'll look to trade again. So kind of a gap and go is what people refer it as. We covered Overstock, Snap, JD. Oh, here's one. This is one where this is why stop losses are so important. So this is PBI, a really, really beautiful pattern through here. So this is the day I bought it on. You can see, let's see, breakout of 147% through here with volume. Then volume gets quiet as it pulls back, and then it starts to wiggle a little bit more. So let's see, from the top here to the base or bottom, 34%, so it doesn't violate that 50% rule that I have. And then it's starting to make higher highs, higher lows through here. And I didn't know, I wasn't watching the stock until someone on StockTwits said, Nick, check out the stock. That's why I love when you guys give me stocks to check out. So always send me those. I really appreciate it because it makes me money. On this one, broke out here and then pulled back. So I got in after hours at 650. And then the next day, it just really broke out after being nicely coiled here. You saw, if I get rid of this big volume, so you see some relativity there, double the volume on this day after a really nice kind of pullback to the 8-day exponential moving average. So exactly what you want to see. You want to see volume kind of right there when it breaks out. Next day, same story. Sold some into strength. Kind of zooming back here. You can see sold some into strength. And then let's see. Oh, and then today, so we had earnings today. At one point, went over the high of the day and sold some there and then got stopped out of the rest. Let's see what my other. So 721 was my remaining position that got stopped there. And let me just show where 721 is for you guys. So that's 721 right there. Look what a stop loss prevented. Because it's hard to sell a stock when you're in it, it's been a winner, you feel good about the position. But by limiting my loss on this, from 721 down to the close, that would have been 26%. And the more it starts dropping, the harder it is to sell because you're thinking it's going to bounce right back. It can't be this low. It can't sell off this low. It's got to bounce. But we saw a strong sell-off all day long. And thank God for stops. And that saved me a couple $100 and kept me profitable for this week, but kept me profitable for October, a month that the market was not profitable. So that was PBI. Let's see. And we got Roku. This was another quality setup that just broke the wrong way. So strong breakout through here to 43%. Sorry about that. Pull back to the 8-day exponential moving average. I did buy on this candle where it made higher highs here and then just immediately squatted. Sold half the next day just to lighten up exposure and then got stopped out of the rest as it broke under this day's low of 218.50. But kept watching it because I noticed this 20-day simple moving average was coming up to provide support. So thinking, okay, we get the 20-day, we get the 8-day right there for support. Add some buying volume in, and this will break out to the upside, and not even close. This broke down heavy, closed under those moving averages the previous day, but today was just rapid selling. Now we're at the lower Bollinger Band, got an uptick of volume, and you do have earnings coming up on the 5th, so something, I guess, to watch, but hopefully you had a stop loss here because that would have saved you 5%, 6% or so. But another quality setup that broke to the wrong side, showing market weakness. All right. Let's see. Anything in the stop loss saved you too? Good. This is live. Yep. Missed Overstock. No. So I'll jump really quickly back to Overstock. Overstock is not a buy. If anything, it's the most bearish chart that you could see. I was short it today after it popped up and couldn't clear over the 8-day exponential moving average, and then just started plummeting. So I started my short position when it was up 2.5%, 3% today. Let's see, what was my buy point? That's not going to tell me. Started it when it was up 2.5 or 3%, and then just sold off all day. Previous day, we got opened up 12%, sold off, bearish engulfing candle, huge selling volume. Not a stock that you want to own. It might bounce, but this is not showing any general strength. Definitely not something to look at. Okay, a couple stocks I want to watch for. This one has 15 followers on StockTwits, which I don't know why more people aren't talking about this. A couple traders that I follow on Twitter have brought this up, but this is WTRE. You can see the volume pattern, exactly what I want to see. Breakout on high volume through here, then just kind of pulled back on lower volume. Got really quiet in this pullback, right? So even though that was a 14% pullback, very, very few sellers through here. Then broke out on high volume. These 2 red days were super quiet. Another breakout, heavy volume, super quiet. Another breakout, heavy volume. It's gotten very, very quiet. And then today we got higher highs, higher lows. Did not take this trade, but I mean, this is as clean of a setup as you could want. If you're trading with heavy capital, probably something you have to avoid because it does trade light volume. 50-day average on it is 350,000. So not going to be a ton of capital in the trade, but WTRE looks really good from a chart perspective. NIO. So this is one that we had talked about before. Was pulling back on lighter volume after a huge, massive volume breakout through here that we were in. Sold some into strength and then sold the rest, unfortunately, as I was just trimming back all my positions. And then, let's see, Friday, Thursday, Wednesday, Tuesday. Tuesday, we saw the first sign of strength. A lot of the Chinese companies were moving up on Tuesday. Big buying volume, closed at the high of the day. Then we got an inside day on Wednesday, but maintained over the 8-day exponential moving average on slightly lighter volume. And then boom, Thursday broke out. What was it? It was like 15% or something. 12%? Oh, it was 15%. I measured from the wrong side of the candle. 15, maybe 17, whatever. Full green candle, just like it does when it breaks out on high volume. Today we got a red candle in the upper half of the previous day's candle and on slightly less volume while the market was terrible. So this still looks bullish. I'm not buying in at this point, but if you're already in the stock, this candle doesn't give you a reason to sell. If it starts breaking under the 8-day, then that's a reason. Retest that base. Maybe you take some shares off. Maybe you took some shares off as it broke out to just lock in profit. But this right here, this one candle, while the market's been weak and it held up relatively well, not a real reason to sell at this point. Still acting very strong. This is NIO, SPWR. So SunPower, you can see, I mean, this has just been 200% or so, very strong. Has wiggled around, but look at the price relativity, relative strength. That's holding flat, that's holding well. Hasn't truly sold off yet. And today was super light volume, 2.5% down. So basically right there with the market. And for a growth stock, being right there with the market basically shows good relative strength. But what I want to see is a close over the 8-day, over the 20-day, and ideally volume pick back up when it moves like that. But SunPower, that's in solar, that's the leading industry right now. So leading stock, showing good relative strength in a leading industry while the market's weak. Once the market turns around, it's going to be one to watch. ENPH, similar story. Not as nice as SPWR. Doesn't mean it can't break out harder, but got an undercut of previous lows, which I like to see when I'm not in the stock. But to get some of those stops out, couldn't couldn't handle any prices over the 8-day just yet, but relative strength doing relatively well, flat to slightly higher. But what I'm really noticing on this chart is the volume on these 2 red days after the push up here, super quiet. So even though the price is moving a lot, not a lot of people are getting in and out. So that tells me there's some relative strength here. And in a market that's showing no strength, something to take note of. So that's ENPH. And the last one I had was BRP. And then we'll get to the October trading results really quick before we call it a stream. So BRP, I see this is up after hours 12%. I'm not sure if that's legit or if that's just because the bid and the ask are so far apart because of illiquidity. But something that I had been watching, again, thanks to another person on StockTwits, but this is exactly the pattern you're looking for. Strong breakout from May's lows, 170%, whatever. And then you get that pullback of 18% from the high. This one has a long lower wick. Not exactly the same, but call it equal kind of pullbacks through here. But let's see. Now through here is setting possibly slightly higher lows. So this can start to turn up, move over these moving averages. Another thing to notice, let me get rid of that one, is green candles, very, very large volume, red candles, smaller volume. And that pattern consists throughout here, so that tells me more people want to get in, and then when it does sell off, it's doing so when there's not a lot of sellers, which is a good sign, sorry. So that's BRP. So I see one in the comments for NVAX. This is a common one that we've talked about on here. And in August, I was saying on StockTwits to watch this gap over here. So where the high of the day here is lower than the low of the day the next day. So the high of the day I was watching for was 81.19. In August, I was saying if this keeps showing weakness, we could see a gap fill. Getting a lot of hate for saying that on StockTwits, but we eventually did get it. I was shorting through August, through all this weakness. And then actually I took this long a couple weeks ago because it was setting up with that good VCP pattern. So from high to low here is 24%. From high to low there is 15%. And then you got another really small one there, like 5%. So I bought on this break over the previous day's high here. And then I added to the position with a break over, again, the previous day's high on this candle. But similar to the last breakout here, it failed right at the 50-day simple moving average. So after it failed, I gave it the next day, could not hold those prices. And then when it undercut that red candle there, I got stopped out at 107. Yeah, 107. Since then, my stop was a good thing. Continued to sell off. Started pressing on that lower Bollinger Band like we talk about. When you start to press on that and it's constricted, when you close at the low of the day, especially as selling volume's increasing, that just presses it down further. So we've seen a couple sideways days here, but basically in a downtrend all throughout. Let's see, is the gap filled? Yeah, the gap did fill eventually, like I was calling for in August. So today's low was 78.50. The high of this gap was 81.19. So gapped filled. Not a stock that I'm looking to buy. In a strong downtrend. They do have earnings coming up. Unconfirmed. I don't know if that's when their earnings is, but strong downtrend, undercutting the low here. Has filled the gap, but so you might see a quick bounce here, but I would be surprised to see it break the 20-day simple moving average. If market pressure stays low, you could see this kind of go back to the lower base again. So again, I don't play the bounces. I'm not a day trader. I want a stock that's showing good relative strength that when the market turns around is going to break out even further. This is in a downtrend, higher selling volume than the buy days, continues lower on that 8-day exponential moving average. I'm not buying into a downtrend ever. So that's NVAX. Thought it might break out here, but unfortunately did not. You have to honor your stops. And then I see Fiverr, which is something that I am holding right now. Bought on the earnings day after it showed great relative strength, great buying volume, closed at the high above the previous day's high point and over the 8-day exponential moving average. Unfortunately, could never get over that 20-day. Sold some today just to lighten up overall exposure, but we'll see if this breaks under the low of the earnings day. If it does, then you just gotta get out, or not breaks right at that price, but see how the low of the day and the 50-day simple moving average and the lower Bollinger Band, lot of possible support there. But because my entry was up here because I was trying to buy on strength, not a good trade so far. And again, in normal market health, when a healthy market, this is probably continuing its breakout because there were so many buyers. The move down shows you how weak the market is right now. So thankfully, didn't buy with a large position size, but this is just showing you how tough it is for strong stocks to be successful lately in the market. So you don't have to trade. You don't have to always trade. I'm trading with very little capital right now, have a net short position, and won't trade with my typical position size, 10% of my portfolio for each entry point, until the market's showing strength, until we have the growth stocks, the market leaders breaking out and actually holding their breakouts. We saw a lot of breakouts and then immediate squats back into the base, or earnings where they opened up high and then sold off. Not what you want to see, and that's showing overall weakness. Let's see. Oh, I did have one other that I wanted to talk about. ANAB, got this from StockTwits as well. Added this to my watch list. Really nice flat top here. As this moved sideways, volume got very light. Come on. Volume got very light after a 50% move higher. So this was one that I was just watching, hoping it would break out and hold, and so far it has. Up another 13% from the breakout point. Buying volume getting a little bit light here, so might see some sideways or a pullback to the 8-day. Let's see, they do have earnings, unconfirmed. We'll see about that. So that's ANAB. So not a trade you can take right now, but a good one to train your eye. Broke out on high volume, then went flat as the 8-day ran up. Volume getting lighter and lighter and lighter. Because it's an uptrend, when the stock started to show some strength, you could have gotten in on that breakout and then caught the wave higher. All right. Oh, should have thrown that disclaimer out earlier, but everything that I talk about is just for educational purposes. Trading has inherent risk. Please do your own due diligence. All right, so we have Stock Tricks with Nick, October 2020 trading results. So I was up, here, let me go to the overall one first. So I was up $540, nothing much at all. But as the markets were down this month, that's still a win for me. These are the trading statistics that I like to look for to kind of shape my my sells, my stop losses for, and let me kind of walk you through what we're seeing here. So took 64 trades in October. Not a great winning percentage. So only 38% of the trades were wins. But because my average win to my average loss on a dollar amount was 1.8 times the average loser, the average win was that, I could stay profitable. So you don't have to be right all the time in trading. And because I can look at this win rate and be like, okay, Nick, you're wrong 63% of the time. It makes it easier to take smaller losses because I'm not going into a trade thinking, Nick, you have to be right. You're a smart guy. You're going to be right about this. Everything's lining up. You have to be right. No. The fact that I look at these stats, see, Nick, you're right only 38% of the time. So that gives me kind of like that ego detachment of when things are starting to go wrong, I could get out of the trade and keep my loss small. But when the trade's going well for me, I can stay in the trade and keep it running because I know I've seen my stats, I've been tracking them since June now, that my winners tend to run. So when I'm in a good stock, I'll take some profit at each multiple of my average gain. So overall, my average gain on a winning trade right now is 6.5%. So at every 6.5% multiple of my entry point, I'll take part of my position off to lock in the profit. But typically I know the winning stocks that I do have will continue winning. So I want to stay somewhat in those stocks. So you see my average win, 9%, my average loss, 5% on a percent basis. And then weighted average. So unfortunately, when I'm winning in October, it was on lower dollar amounts for the wins. But thankfully, when I lost a trade, when I was a loser, I was losing on smaller position sizes. So I put on position sizes with smaller amounts for my losers, which just kind of gives me an indication that I'm getting out of the trades quicker. And when I'm not as confident in a position that I put on slightly smaller size. So these are the overall stats, October versus since I've been keeping track in June 1st. So overall, my winning percentage has stayed really basically the same, that 60-40 split. Didn't do as well on that win-loss rate on a dollar basis. Typically, I was right around 2. So got to bump those numbers up, but still seeing decent numbers. So let's go to the long side. So long positions only, I was down $140. Again, that win rate 37 to 63. Most of my trades were from the long side in October. I did have a large hedge position using QQQ short or DIA short. And here we go, average win, only 1.68 times. Really would like to get that 2. Ideally, it's as high as possible, but if I could get that to 2, that'll keep me consistently profitable, even with a win rate of only 37%. Average win, weighted average win, 9%, basically right in line with the 9.3 unweighted. Average loss, basically right in line with the weighted average loss. So that win-loss rate on a dollar amount keeps me profitable, even though the win rate isn't ideal. Need to get better at the win rate. I don't. When I have more time, I'll go through trade by trade, and that's something I suggest everyone do. Go through your trades, journal them out, collect your trading statistics, so you can kind of highlight, identify, understand, and fix what are your toughest challenges in trading. Is it your entries? Is it not being able to take a loss? Is it not letting winners run? All those things can be identified through a trading journal and keeping those trading statistics. And then on the short side, only took 4 trades. It was a very large size because I was hedging almost my entire position. But 3.4 times my average loss, so that's ideal. My average win was 5.5% compared to the average loss of 2%. Much better than since June 1st. That makes sense because the market was down in October compared to the rest of the year. Wanted to jump to this really quick. We've shown this before. This is a break-even chart. This is why taking quick losses is so important in trading. A 5% loss, you need to gain 5.3% on a trade to get to back even. A 20% loss on your portfolio, and you need 25% in your favor to get back even. 50% loss, you need 100% gain. So basically the math is working against you. So you need to be very diligent on always keeping your stops tight, keeping your losses small, and then letting your winners run. If you're wrong, admit you're wrong right away, and you can always add the position back. No, did I not have it? All right, let's jump back to the chart really quick. Oh, here it is. Why did that not show? Oh, sorry. Let me jump back. So really quick, I put this on StockTwits and Twitter, but a lot of people will always talk about beating the market, right? And they'll typically do that as, okay, when the market's having a green day, I need to have a better green day to be able to beat the market. And that's not true. Being able to avoid losses or just not trade when the market's shaky, giving you warning signs, allows you to beat the market on the red days. So this week I was down like 1.7%, $720, $740, whatever it was. I was only down 1.7%. The market was down 5.5%-ish. I'm not sure exactly the number, but here's me versus the market since I started keeping track in June. And you can it's funny, but you can see the exact week that I finished Mark Minervini's book, Think and Trade Like a Champion, how far the gap away from the S&P 500 and the NASDAQ I was, and how quickly I've made that up. So if you don't already, follow Mark Minervini on Twitter, buy his book, $30 book. I have never talked to him in person, but that book really changed my trading style, has given me much better results than I've ever gotten. But it's not just because I read the book. I read the book and then I took the advice. I journaled every one of my trades. I'm keeping my trading statistics. I'm only betting large positions when the market's healthy. I'm starting to understand when the market's giving those warning signs, earnings getting sold off, breakouts breaking the wrong side, or breakouts squatting, all those warning signs, starting to understand that and taking profits a little bit quicker. But trading's not easy. It's going to take a lot of hard work to get you profitable, consistently profitable. I'm learning that. But since June, I've had decent results. Since I finished Mark Minervini's book, I've had really solid results. And we're seeing the highs. Maybe I don't beat the market when it's skyrocketing, but when it pulls back, I'm not pulling back nearly as much. So you can beat the markets on the red days, not beat the markets on the green days, and still beat it overall. All right, with that being said, please leave a like and a comment if you enjoyed the stream. Those likes and comments really help push the video to new traders and other people on YouTube. So if you got anything out of that, please help me out and do that. Otherwise, I'll see you Tuesday night for another live stream. That should be an interesting one with the election coming up, or on that day. But my trading plan is basically to be net neutral by the election night. I'll probably take off my shorts, take off any positions that I have that aren't showing really good strength, be as little exposed to the market as I can be on that day and throughout the week, because market's not acting strong, no reason to try and swing for home runs. All right, have a great weekend and take care.